Hey everybody, welcome to the Journey Up, an entrepreneur's guide. My name is Bryce Ocepek. I'm the Executive Vice President of Anabasis Real Estate Investment Trust here in Jacksonville, Florida. We are a company that is focusing on investing in value-add real estate here in Jacksonville, and this is my team. This is Brylen. He is my lead associate here at Anabasis Real Estate Investment Trust. This is Mark Ocepek. He's the President and Managing Director of Anabasis, and this is Ernest Jenkins. He is the Project Manager of Anabasis, and I'm super excited to be starting this show for our team. We're going to be diving deep into the entrepreneurial journey and what it means to be an entrepreneur and the pitfalls, the highs and lows, and the meaning of Anabasis as well. We're excited to have other people come onto the show and talk about their journey in entrepreneurship, no matter what the business might be, whether it's real estate or not. But I wanted to talk a little bit more today about Anabasis and the meaning of the word and why we chose it. I know, Mark, you may have a little bit more insight onto that topic.
Yeah, well, thanks, Bryce. I was always very fascinated with Anabasis because it's actually, there's a book. It's called The Anabasis, or The Persian Expedition, or The March of the 10,000. And it was written by Xenophon. He was a Greek, or he was an Athenian, and he wrote The Anabasis about his experience as he went to the Battle of Cunaxa, which was a battle in 401 BC. And it was the actual word Anabasis in Greek means the journey up.
Yeah, literally translated
the
journey up, which is why we named the name of the show that as well and founded our company on that.
Exactly. So reading his Anabasis or the journey up was really fascinating to me because it was about his struggles, his pitfalls, his dangers, his everything that he encountered, which was also a book that was read by Alexander the Great, which inspired him to conquer Persia. And so I just, for years and years and years, I've read, the Anabasis, and it's just inspired me. Mm-hmm. So I wanted to name the company Anabasis and also find out about other people's Anabasis or their journey up.
Yeah.
So it's a lifelong experience.
Yeah.
And that's what's exciting to me, at least for our company and developing the journey up, because it's something that takes a lifetime.
Yeah.
Right.
And you still develop it every day. So in a year from now, we can still talk about our journey up because we're still journeying up, and other people in Jacksonville, whatever type, like you said, Bryce, their entrepreneurial journey, which doesn't have to be real estate, but can be in any type of business.
Yeah, and that's going to be a big part of the show as we bring guests and other people from different walks of business, is to ask them to share their Anabasis. What is your Anabasis, your journey up in entrepreneurship, no matter what that business might be? Mm-hmm. I'd like to hear from you, Mark, about your Anabasis. What's your story?
Yeah. So my Anabasis was, from the beginning, I got very interested in business because my father was just a pioneer in the radio, television, and tall tower business. So he was just a pioneer in it, and I saw his life and how he built entrepreneurship and companies, and definitely wanted to continue to follow in that footstep. my dad and my uncle very influential for me because, again, they were the greatest generation. Uncle Frank, he went to, fought in the Pacific in World War II, and was just, I would hear the stories, and I would see, he would make sure that I would get up and work. You got to go up and work. Are you getting up every day, Sonny, and getting to work? Yes, sir. I'd go out and cut grass and do the thing. So he would be very on top of, what are you doing to be successful?
Yeah.
So that probably instilled a lot of discipline at like a very early age then. Yeah.
Extreme discipline. He would be, he would just really teach that discipline. And he, I wouldn't say he wasn't like a pusher or a driver, but he would just be very matter of fact.
Right.
Like you need discipline. You need that, and I need to look at that. And so my grandfather was that way, and my dad was that way as well too.
At what age did you transition from being pushed to mow the grass into more of, your real business ventures?
Well, I mean, I think it was, kind of sticking with my Anabasis is, it's like a process. You have to move up the line. And so, he would, discuss those things with me. And I think that those pieces or nuggets, let's say, would guide me in who I am today in my life, in my Anabasis, and how I created what I've created, but not just that, but just how I am today. And I think a lot of those influences, become real in your life through entrepreneurship. And here's an example. So my Uncle Frank, I give a lot of credit to because my dad actually, from his World War II savings, my dad borrowed $10,000 from my uncle to actually start some of the early companies that I started with that I was with. I think.
What was one of the first companies?
One of the first companies that my dad started, I was obviously too young, but he borrowed $10,000 from my uncle to start a company called Lake Communications. Lake Communications was a company that it encompassed radio stations throughout northeastern Ohio, where I was born in that area. So he started with one, and it was the old WPVL. So whoever is listening, out there, there might be somebody that remembers that old station in Painesville, Ohio. And, it was, I believe it was where people value listening or something like that. That's kind of the way they roll it. But anyway, my dad borrowed money from both my uncle and my grandfather to buy into that partnership, where he became the president of Lake Communications. And then he built up Lake Communications. That was in 1969, so I was young.
Yeah.
So I didn't, but that started my Anabasis to become who I wanted to be. You asked me about entrepreneurship. So what I did was I watched him. I watched what he did. And I remember there were times along the way that was really interesting pieces that hopefully you're getting from, our journey up.
Right.
And he would give us, like for instance, so with Lake Communications, as a matter of fact, I still have his original stock certificate, 1969, Lake Communications, where he raised, it was similar, it was venture capital at its purest. He would raise a group of businessmen in the area, and then they ended up buying Lake Communications, which then grew into like a six stations throughout the area. And again, remember, this started from World War II money that my uncle
Yeah.
and grandfather got that they let him borrow, and then it became what it is from Lake. So then Lake Communications, then he sold Lake Communications. I want to say it was around, I think I was still maybe just going into like middle school, maybe ish, and he then started a company. At that point, he actually partnered with a group of guys from Cleveland, because he then basically took his winnings and he's like, all right, I want to do this again. And so there was another station that he had his eye on, and it was called WQAL. And then he started a company called WIN Communications, WIN Communications. And he partnered with a guy named Walt Taberski. And hopefully Walt's listening, and Walt's, doing well. Good friend of mine, super guy. Love Walt. And he partnered with Walt Taberski, and Walt was super smart. At that time he worked for Mallwright Communications, and so which was a huge company, really big. And he then joined Tony, my dad, on that. So it was kind of, stacking that entrepreneurship, right?
Right.
He was building to the next level.
Yeah, I mean, you have to take it a step at a time. It's not
Right.
it's not a race. It's
No.
it's a
Yeah.
crawl, walk, run.
It is. It's a crawl, walk, run, and it's a timing.
Now, since all that was going on at like that age of your life, did you feel like this like immense amount of pressure to kind of follow in their footsteps, or did you kind of?
No, I kind of was just, I loved business.
Right.
Like I always would like get good grades in economics, and I loved finance and stuff like that.
So you knew you had a knack for it at an early age.
It was like in my blood. It was like you kind of had to know like that entrepreneurial, like you're either born with it or you're not.
Right.
It's just like you're either born with
The spirit
because it's rough.
Yeah.
It's a rough game. I mean, it is
being
not
able
easy.
to go months without a paycheck, or wondering where the next deal is going to come from, or
Right. Or having to write the check.
or having to pony up the dough.
Yeah.
Well, now that that was all kind of going on while you were going into high school, I guess kind of walk us through what your life looked like right outside of high school,
Yeah,
like
well,
graduating and.
At that time, it was my dad, myself, and a gentleman named Carl Hirsch. And Carl was a great guy, super guy. I learned so much from him. Super businessman, amazing guy, and got to be a part of his companies along with some of the greats of the time. Walt Taberski, Carl Hirsch, great radio and television and tower entrepreneurs, where I started my career in the tall tower division of Omni America in 1996, and it was an amazing time in the 90s because I could see those guys just working, and they just to sit under their feet as they were solid venture guys and Wall Street guys that built companies that were beyond your imagination.
Right.
And so that's where my Anabasis really started, was from the team of my dad, Tony Ocepek, Walt Taberski, Carl Hirsch. I feel blessed, very fortunate to have, being able to sit under their feet and then carry my Anabasis or my torch forward, and giving it to others along the way, and guiding, giving other pieces of knowledge to everybody else. So that's what excites me, and that's really kind of my defining moment was really when we took the company public in 1998, and we did a reverse merger. Just really a defining moment of seeing, your work
come to life.
When you raise capital, and then you take a company public, and watch the senior management really do their thing.
Yeah,
It's
I mean,
really
you
a
obviously
defining
experience a lot of emotions, highs and lows as you're going along the journey. Obviously, that's a big high. How'd that feel?
Yeah, it was amazing because you were sitting there waiting for it to trade, and then you're hoping that it doesn't go down.
Yeah.
And so you're sitting there. I remember my dad and I just sitting there watching it on the computer, and the minute it hit, because we had really a lot of big backers, because we had raised $100 million before that, and then when we took it public, we had a lot of assets already, and so when it hit the public markets, I mean, it just
blew up.
It blew up. That's
awesome.
Amazing. It was like straight up, but nothing always goes straight up. It
goes in ebbs and flows.
Yeah,
exactly.
So that was really my defining moment, sitting there, and we were in West Palm Beach, Florida. That's where we had the company. So I remember Tony, my dad, Carl, and all the guys were in the room, and it was just electrifying.
Yeah.
Because of course I looked up to them because they were, a lot older than me, and just they were much more experienced.
Yeah, exactly.
I was young.
Obviously, we're transitioning right now to do the same thing with our company. What's that feel like from doing it at the back end with Carl Hirsch and all of the guys back then in the 90s to how we're doing it today in the modern era?
Yeah, well, back then with Tony, Carl, and Walt, and the other guys, it was, back then there was really no, the internet was just starting out.
Yeah, exactly.
I mean, there was no social media. There was cell phones were there, but they were like as large as shoes. So it was just a different time.
Yeah.
Raising capital was way different back then. Very much. That's kind of why I'm kind of still the old school. I like to, go face to face, handshakes.
Yeah,
how you
right.
doing? And which is raising capital is more of a personal experience, and also a trust once they get to know you. So very transparent. That's why they were always straight up guys, and so it was a different time, a different era.
That's got to be a cool experience, though.
Yeah.
I feel like you really have to have that passion for learning, and you have to have that hunger and that real internal drive inside. You can't be somebody that kind of needs to be given direction. You kind of have to have that will in your soul deep down to really want it to really get to the next level as an entrepreneur. So I think, like you said, sometimes you're born with it or you're not. But
as a matter
at the
of
same
fact,
time, if you're born with it, though, I feel like you still need to have the discipline and work towards it. Like you said, every day, get up, go to work, do what you need to do to progress forward, because you can have that drive and that entrepreneurial spirit, sure, but you may not have the dedication and the determination to push through, because you are going to hit highs and lows, and you got to come out of those lows. You got to get up.
And it's interesting that you mentioned that, is because, Xenophon talks about in the book the determination and the will to overcome it, no matter what, at all costs, getting up every day.
Yeah.
And that inspired Alexander to do, to conquer the modern world and to his different battles. But it all stems from that. And even it's funny because, I don't know if my uncle or my father or my grandfather, read those. I don't know if they did, but I'm saying is But that's what they used to tell me.
Yeah.
You got to get up every day, cut the grass, get going, do your stuff.
You did the same thing to me.
Yeah, exactly. Exactly.
I mean, I remember watching you when I was a kid do Riverside, and I mean, I was the same as you. Starstruck eyes. I was, all about business from day one. I've always loved it, and watching you do the things that you did in my childhood, working through Riverside and iCruise and everything that you did was really almost the same thing that you experienced whenever you were watching Carl Hirsch and Pop and everybody that ran the company. So it was same for me. It was a great experience watching that play out through my entire life, and I think that helped me understand the concepts at a very early age of what that even was, how it operates. So by the time that I was working in commercial real estate and things outside of college was really how I was able to identify the opportunity that we had whenever we were working at Equity Pro before we started kind of the fund as it is today. I know that Riverside Investment Partners was a 506C, correct?
Yes. Yep.
So what I think is really interesting about the 506C is the difference between how capital was raised back then and the difference in the way that private equity really is structured versus how today, you really see a lot more crowdfunding. You see a lot more, public REITs, what we're moving towards. You don't see as at least from what I can see, as much capital being pushed on the 506Cs right now in private capital raising, just because there's so much money waiting on the sidelines right now. So what do you guys think about, the current state of the private equity market, all the money on the sidelines, and kind of future notes of commercial debt right now, and kind of the space in general that we're moving into?
You want to hit that, or you want me to?
Yeah, I mean, I think it's one of those things where obviously in the next year or so, a lot of those loans are going to be maturing, so a lot of that money will be due. I think you're going to see a lot more people get into these pitfalls that we talked about earlier, and that's going to leave a lot of opportunity for people like ourselves or other investors to then take ownership of those things.
Yeah.
I mean, you got interest rates rising right now. You got a ton of office space that is not being used. People own those office spaces, and those loans are going to be due soon. And I think they're going to have to sell.
Yeah,
I think you're going to see a lot more listings. I think even
a lot more
opportunity for us in the residential and commercial areas too. Just today, I think I was looking even on our local MLS, we have 7,100 listings.
Yeah.
This time a year or two ago, we were
2,000
or 3,000.
So it's more than tripled.
It's more than tripled, and I think we're heading in that direction.
Yeah, I agree.
Mean, what do you think?
Yeah,
Mark?
I think that's again, opportunity, because you want to buy when everything is falling apart and everyone is terrified.
Yeah.
That's when you want to buy.
Which I think really is right now.
That's it, And when everyone's fat, happy, and greedy, that's when you want to sell. So
Right.
Yeah.
I think you just need to, kind of liken that again unto, the Anabasis, like where, he got, he fought when he, appeared weak.
Yeah.
And, he retreated when he was strong. So I think that's where we've got to, make sure that we let our listeners know on the journey up, an entrepreneur's guide, that we can explain to them, the times that they need not be afraid.
Right.
Yeah.
And that they need to, keep the margin of safety. They need to, keep their cash. They don't need to, spend wildly.
Right.
They need to keep it cheap. Expensive,
Yeah.
And when I say cheap, I don't mean like penny wise and pound foolish, but I mean,
of course not.
enough to where you're keeping a good balance.
Yeah,
100%.
absolutely.
100%.
I agree.
To piggyback off both of those points, I was at a symposium today about
What is
office
that? Sorry, what is that? Is that like a
It's a what is it, symposium?
Yeah.
It's kind of like a sitting, a meeting. Let's call it a town meeting.
Right.
Right.
For the city of Jacksonville?
Yeah, city of Jacksonville. It was a symposium about office space into residential conversion.
Right.
Okay.
So we were talking about interest rates and where do we feel the state of the market is. We had representatives from the CBRE, people who do office space conversions in big cities or like a little further along than our curve.
Yeah.
San Francisco, Los Angeles, New York, Virginia is a big place, and DC, because they have a lot of older commercial things that they don't let them just tear the building down and do reconstruction. They're very creative things they have to do. They have to take the building and build around it, and you still have that structure inside. So you have to repurpose the space and make it, multi-use. So you'll have apartments up top, commercial kind of retail shopping spaces in the bottom. Is very, very interesting what the state of the market is. And he was like, I can't quote it, but I'm kind of paraphrasing. It was like real estate is investing is like future forward. Basically, they want to take buildings and because you don't know, because of where we are, we're so uncertain. Like nobody has the crystal ball. Like loans are maturing on the commercial side. Of course, you'll have some opportunity there. That goes without saying because every market has its cycles. But what do you do? Because it's not just going to be like everybody has to go back to work in the office for sure. Like some companies are mandating that, but you have to think about the consumer or now the worker. Like a lot of commercial buildings are going to fall like non-useful because like they don't have what the worker wants. Like what he said, and he pointed out a great point that COVID taught us that a lot of people want to go outside. Like you want to have certain amenities when you go to work. Like you don't want an office building. Let's say the Wells Fargo building had just thousands and thousands of feet of commercial parking around it. There's no scenery. You can go outside and eat and get away from your desk and things of that nature. So a lot of the plans and architectural things that have to be presented to boards of each city, even in our city, that I go to and try to stay in the know so we can always be future forward thinking. It's like you can't just like, okay, I want to do this new construction building and it can be all apartment buildings. Like everything around it has to have kind of amenities and how you can interact with the area that will bring business to local shops, still have agriculture involved. It's very, very complex. We're at a very, what's the word I'm looking for? A very unknown time in the market where you have to be very savvy and you have to have a forward-thinking mind of not just what you want as an investor, as cash flow and
and this
debt
is like
service
kind of
ratio.
Their way of trying to get more people into these office spaces to work and draw them into these spots.
Yeah,
so that's kind of what they're.
Because you gotta think somebody has to work,
right?
Because that's what companies are built on. So it's a time that we, as our company and everybody, should be thinking. How can you be future thinking for not only your investment and your money, protecting your money margin of safety, but how do you do that? Like the pillars, what are they built on? The worker, you have to be conscious of the worker and how they feel.
I agree
for sure. I think, our kind of beginnings in Equity Pro when we started working together, first was really an interesting topic that I wanted to bring up just because I know that the entrepreneurial journey from a lot of people in real estate starts in the wholesale and traditional game and then moves to investing, whether it's in residential or as rentals or flips, and then graduates to commercial, and kind of that phase kind of continues to escalate, and that's kind of part of my Anabasis. But I wanted to kind of talk to you about the differences of what you see in the market right now versus how it was back then when we were assigning contracts to investors all over the state of Florida for, crazy prices that were, buying properties sight unseen. They were buying stuff at the drop of a hat within 30 minutes. I think that you don't really see that in the economy anymore. But kind of how we work together as a team to, pick up a couple of really great assets in, multifamily, self-storage, and residential to really build our credentials on the REIT side as we were coming up, bringing this fund back to life in the last couple of years.
Yeah, man. So so that's kind of my journey up. How I kind of got into real estate is just like Mr. Mark. I have blue collar parents, hardworking. my dad was a chef. So basically, my first job out of high school, I was like into pizza, right? So I worked at Domino's, and then I went to college, and I would come back and work at the Dave & Buster's. But my dad was always on the road opening new Dave & Buster's stores because he was one of the trainers and things of that nature. So I was there while he was away, but I had his morals and what he brought me up. You know, cut the yard, get up, make sure you do work. Everything you do, son, should have your signature on it. That was one of his things. So I always had that. Yeah. So I always have that, you know, mentality. And I was working. I worked at Dave & Buster's, but you know, I wanted to go be a store trainer. And, you know, you think about money growing up a lot. You know, so you want to try to get to the next level, excellence. So, but being young, right? So I'm guessing I'm like 21, 22 or what have you when I had to come home from school because of some stuff from my parents. And basically I was working and I just wanted to kind of work my way up. But being young, you can't understand this, but I didn't have the, not maturity because I was a mature young, but I didn't have the understanding of people. I hadn't been through enough life. Right. So, and they wouldn't say it that way. It's just like they knew, they just couldn't put their finger on what you know, they wanted to kind of slow my progress, but I was already better than people way older than me. You know, so that used to frustrate me a little. And then, you know, the economy always goes through its ebbs and flows, whether it's major or slow. So cutting back hours, I caught a second job at the Cheesecake Factory, and that's kind of like the next level when it comes to restaurant chains. Like if you're a chef, like if you work there, you can kind of work anywhere. If you work at Pasta Saute. So I was really good. And you know, I was thinking about training for management, this, that, and the third. And then like I've been in the cars my whole life, and I used to play Need for Speed. Like, and it's just like the math didn't start adding up. It's like, let's just say I'm working here 13, 14 hours a day, Friday, Saturday, Sunday, whatever. And it's like, I want to be a manager to work more hours to manage people's attitudes who's nowhere near as good as mine.
That's the restaurant industry.
To manage people's attitudes for how much a year?
Yeah. Your salary too, right?
Yeah, and then your salary, so you're going to be there. You're going to be there. Rain, sleet, or snow. If somebody calls out, you know, you're there. You know. And then I was like looking at the price of a McLaren, it's like $350,000 divided by a $50,000 a year salary starting out. It's going to take too long. It's going to take too long. So I was putting up the pans, and I just wanted to one day think about what I wanted to do. And my dad would always put the seed. You know, everybody and their mom always hears, you know, rich people, they always have real estate. So my dad doesn't know a thing about real estate necessarily, but he would always say, plant the seed. Hey, you need to get a real estate license, son, this, that, and the third. He was always just something random he would say. And of course, I'm like, I don't care what you're talking about. Like, I'm trying to think about. And then one day when I was having that thought in my head about wanting to get out of the kitchen, I was like, my dad always talking about real estate, so let me look up some stuff. So I was searching on YouTube. I looked up some stuff, seen a guy named Mark Whitten. He's really good in the wholesale. I think he's up in Maryland, Virginia area, the DMV area, whatever. He was good. I bought his little course for like $300. It was like the first credit card purchase I ever made. Right? It's like $300 something, and it was a wealth of knowledge in that stuff. Like knowing now, what I didn't know then, but I know now. But what I was getting in, it was so much good stuff. In there. But I followed it. He was like, you know, you need to get a part of your local REITs. You know, maybe looking at Section 8, this, that, and the third. So I would go around town. I cut my hours down at the Cheesecake Factory because you know, in this story that we didn't touch on too much. I only worked at the Cheesecake Factory. I started making decent money. So I was only working at the Cheesecake Factory. But I cut my hours down because I wanted more. You know, so I would cut my hours down. I would Uber Eats to make up the hours. So I would go to the gym, do Uber Eats, then go to work, then get off, and Uber Eats again. And on my off days, I would go to the local REITs. Kept going around long enough, and then taxes were coming back one year, and I think I was getting like $1,200. And then I had ran into this guy, Dave, who recruited us at Equity Pro. He was like, you know, you probably should think about getting your license. And then you looking up stuff online, they always say, you don't need to be a realtor or wholesale, and it can mess you up. But those are just people who just trying to sell you something, a course or something. And
yeah, if you do wholesale, you should definitely have your license.
Have your license. It makes you more dangerous. You'll know the game.
Safer.
It's a lot safer.
Know the game. You can add commissions to your spreads.
It's a lot of stuff. Don't tell everybody stuff, man.
Hey, come on, they got to learn a little something from the show.
You're right. So, so I got my license. I quit my job and I had a little buffer. So I would come into the office. Here we get into the Equity Pro store. So I would come into the office before the broker would get there because you get a key. So I get there at 8, do my work, you know, learn analysis and kind of learn the wholesale side of things. And then lunchtime from like 12 to 2, I would Uber Eats again. And then when I went back to the office, I stayed until everybody left. A little after, I'll be like till 7 or 8.
Yeah.
Uber Eat again. So now I just replaced it.
Yeah.
And then it took me like a month and a half to get my first deal. And I'll never forget my first deal. It got me $475. It was a property over in Lake Shore.
That was a wholesale deal, right?
It was a wholesale deal.
Nice.
We sold to JWB. It's like
Okay,
a
nice.
$2,000 spread.
Hey, but
Crazy.
Yeah.
Yeah.
And I remember my first deal. But
100%.
at that point, that's when it kind of turned over me. It's like it became real.
Right.
Uh-huh.
You know what I mean? It became
And
real.
that's where y'all met, right? Y'all met at Equity
Yeah,
Pro.
That was
we met-
2019.
Okay.
We met at Equity Pro in 2021, and I had already been in real estate. I got my real estate license when I was 19 because obviously Mark was the same way. Get your license because I knew what I wanted to do, and I felt the same way about real estate. But whenever I came aboard, obviously I was kind of wanting to go a little bit more into the commercial route, and it was kind of something that Equity Pro had done a few commercial deals, but mainly they had done residential wholesale. So I was kind of
the spearhead of the commercial side. Like,
kind of
right?
just
Going
figuring
into
it out,
commercial, yeah.
figuring it out as we go. And I think that's a big part of entrepreneurship is trial and error, figuring out what works and what doesn't, and working through the pitfalls every day. But saw success in it very quickly. We were getting much bigger spreads. I mean, I think the average spread on the residential was anywhere from like 10 to 20 grand. A lot of my spreads were 20, 30, 50, and then even one deal was 175 grand spread on one deal.
And can you talk about that one?
That was a really cool deal. It actually it came off of a mailer. Great
so there
things
you
come
go.
off of mailers, so I use direct mail. And the seller was an older gentleman, and he was very interesting. He was a Vietnam veteran, and I mean, he had me sit there at the feet of him for hours on end, just telling me stories. Went to his house, but I think that's part of building relationships with sellers and with clients, and like you always say, a deal is a river. You never know where it's going to flow. So I was following that deal down its path. He said he wanted a certain price, and obviously the negotiator in me was like, hey, we need to go a little bit lower on the price here. And he was like, no, I'm good. And then I call him back, and I'm like, I still, because I knew it was a good deal. I was like, here, I'll still take it at the price that you said originally. He was like, oh no, I'm already under contract with somebody else. I was like, oh, dang it. And
Speed to lead.
and but here's one thing that you should never forget is to continue to follow up with people.
Follow
So
up.
I followed up with him for a few months until he finally said, hey, yeah, that contract fell through. Guy doesn't want to move forward anymore. Do you still want it? And I was like, absolutely. Had to go over, meet with him again, listen to his story for another 2 hours. He was older, so I had to get him to wet sign the contract and nurture that deal all the way from contract to close. A lot of deals that we did, we would either assign or we'd double close on the wholesale side. But we had an assignment lined up to an end buyer, and he had hard money in place. And the day before closing, the hard money fell through, and the old man was going to back out.
Yeah.
So it's like we're sitting here about to close on a $175,000 spread, and we're like, what do we do? So we were able to last minute put together some private money and just go ahead and close on the deal because we knew this is a juicy deal. Don't pass up on it. So that's another thing you should definitely take note as an entrepreneur. Like you said, sometimes you got to write the check. So closed on that and then relisted it and ended up selling it for the price that we had originally planned to assign it for. Praise God, it all worked out. But that was a great learning experience. Just from, obviously navigating all sorts of different types of transactions. I underwrote multifamily, self-storage, motels, all sorts of different commercial assets, and in seeing that deal specifically, as well as a few other deals, I noticed the real opportunity in this business that if you get that really great discounted deal, sometimes it's better to write the check.
Right.
Sometimes it's better to take that deal down internally and, get the entire, not only just the spread, but the return on top of it and the cash flow that comes with it as well and the equity.
Right. Well, also to add to that, a piece of the entrepreneur's guide is that, if there's no risk, there's definitely no reward.
Yeah.
So,
exactly.
you've got to take some risks to get the reward that you want.
Yeah, exactly. So, in seeing that opportunity, I obviously my first call was to you and to bring you and Jim over and to say, hey, look, here's the opportunity of these leads and deals that we have the opportunity for. Let's capitalize on this and use your knowledge and passion for private equity and everything that you had done before with Riverside and all of your other ventures to, let's do it again. And let's seize the opportunity that we have here. And, I think that really was the leading kickoff. And obviously Anabasis was started in 2007, invested in other assets well before then. But I think that really launched the Anabasis fund within the last few years was bringing you together and us kind of working together to look at those different types of, wholesale and off-market deals that we could purchase and start to really renovate and create equity for not only ourselves, but, our investors and people that we worked with along the way. So I think it did a lot for us, and I think it will continue to in the future. So I think that's a big part of why we always talk about portfolio theory is to have those different lines in the water and to be able to do those different types of deals, whether it's wholesale, traditional, and then bringing in, the private equity and raising capital and doing all the different types of deals. So really excited for the structure that we're, moving forward. Obviously, we're taking the 506C that we originally created and transferring it into a REIT.
Yeah, changing it to a REIT.
Tell me a little bit more. Why is that beneficial to transfer it into a REIT, not only for us as the operators, but for our investors?
Yeah, I think a REIT is just with some of the rules and regulations, it's a little more strict on the rules and regulations, which is good because I'm 100% just transparency, upfront, honest in the way you do your business dealings. But the REIT, is very transparent in the sense that, your investors will receive a dividend, number one. 90% of the profits on the REIT are going to be dividended out.
And that's a legal requirement.
It is.
Yeah, I think anything that we have to deal with the SEC strict is almost an understatement.
Yeah. Obviously.
Exactly.
Living in a glass house.
And you live in a glass house, and that's good, though.
Yeah, of course.
Because everybody on up and up.
Yeah, exactly.
Investors should feel safe at that point.
Right.
To know that,
And the only
audited.
risk that they're going to look at, and investors will look at, is can we deliver the goods on that? And I think the risk is more of, can you find the right deals? Anybody can buy real estate.
Yeah.
But to really analyze those deals and to get down to
buy it at the right price,
buy it at the right,
and
'cause
also execute on
Exactly.
the operations,
Yeah.
because just because you buy at the right price as well doesn't mean that you can enact the stabilization plans that you have for an asset. You may say, hey, we're buying it at the right price, but you have a plan in place or a contractor and an idea or plans of how, and I think the deal that we looked at today is a great example of it.
Yeah.
You may get it at the right price and have the plans in place, but it doesn't mean you can execute.
Yeah.
Exactly.
Right. That's what we were talking about at the symposium too. There's like everything, especially with the unknowns of the market right now. Some of these buildings, these office buildings, are good price because there's distress. Obviously,
Yeah.
people are maturing. They got tenants. And every tenant that you got to deal with, it was like, oh yeah, we'll the cash for keys is $1 million,
right?
Because there's a lot of triple net leases and high profile clients. So it's like sometimes if it's not at 25% or less vacancy, it's like it's not even worth doing. It's not worth doing it. It's not because the execution to get the tenant, get it, it's too much.
Right.
And that's where you need to be that smart entrepreneur. Needs to be able to step in and vision and work it. And that's why entrepreneurship is, whether it's real estate, which what we're in, or, other people that may come on the show that may be, car dealerships or electrical, contracting businesses or plumbing businesses, there's entrepreneurship all over. So I think that's,
it's a full contact sport.
It is a full contact sport. It's it's rough. It's a rough game. And I think, for what we're doing to give, that view from, the 30,000 foot level to help them is I think a good calling.
Yeah, exactly. Back to the REIT, give us a little more details on the offering.
Yeah. So what I was saying is that a couple of the reasons why that I think it's a little bit better of a structure than the 506 is, again, I think it keeps that dividend coming for investors, good liquidity at least for that. Again, with the transparency, big into that. So I think that this will, this change, and when I say transparency, I mean like all of our financials are audited.
Right.
We have audited financials by PCAOB auditors, which are public company auditors. So they'll look at every little check and every little detail, every little point along the way. I's dotted, T's crossed, which is good. I mean, that's what you want.
Right.
But yeah, we're doing. We're gonna go out in a Reg A filing, and I think the offering circular, at some point will be out for people to look at, and then they can get the details, upon that being released.
Yeah.
Hopefully it'll be soon. And that'll give them pretty much, 100 pages to read about us.
Yeah.
And, explain the offering, what we're raising, what, our financials, what our vision is. Our vision is North Florida.
Yep.
That's really our vision, is the North Florida market. I think, again, South Florida is a little saturated for us, different market. But for us, North Florida is our baby.
Yeah, I agree.
And I think if people believe in North Florida, in the next 10 years of North Florida, will turn into really good opportunity. Because I still think prices are decent. Are on the journey up. Basically, a good word for that. And when our offering does come out, we're looking probably around the first quarter of 24.
Yeah,
they'll be able to really dig in deep.
Yeah, I mean, I think you touched on all of the major points of it. They'll have, almost daily in high liquidity, very high dividending asset in the stock that not only spits a high dividend, but the share price and the value will continue to grow as well.
Yeah, because we're going to concentrate on our earnings per share for shareholders to increase our EPS.
Right.
So earnings per share will grow, and a decent rental market. We don't want to overpromise and underdeliver. We want to get just a good steady state. We want to be the tortoise and not the hare, trying to get a good solid growth. It's not going to be overnight, but it's going to be in a measured pace.
Yeah.
As I always say, you guys know what I say, two things that can kill a company, too much growth and not enough growth. So we got to find that equilibrium along the way.
Yeah. So I think that's obviously very important for us to talk about. But Brylen, I wanted to obviously touch a little bit on your Anabasis and your story through real estate and kind of your journey up and your experiences and kind of why and how where you're at today.
Yeah, man. So I know that I was very interested in real estate at an early age. Actually, my grandfather, my dad's dad, he used to buy and sell land for Rayonier, which is a paper mill. And then my dad, actually, as a kid, grew up watching him do flips on Amelia Island. So he would do, a handful in between Atlantic Avenue and between Beach Street, and really like in that little middle center part of the city of Fernandina Beach.
Good market.
Yeah, and he always seemed to be pretty excited about it, and he would ask me to cut the grass here and there or whatever, and I kind of like being on some of those sites and seeing houses get flipped, seeing a really rundown house get brought to life, and then be able to sell it for a little bit of a profit. And then he got his real estate license whenever I was as a young kid too, and so I was always around it. And then I think just knowing that in real estate, it's not just your typical office job. My attention span sometimes can be very short, so I like doing a bunch of different things at once, and real estate kind of gives me that ability. I got licensed whenever I was about 20, 21, and Bryce actually got his like a year or two before me, and I knew it was something I always wanted to do, and I remember asking Bryce, how was the test, yada, 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 and I saw him, you had a couple sales.
I had a couple.
And I saw him, and I was like, all right, that's really cool. Like it very much influenced me to want to get into it. And then, just growing up being around it. And then I think, honestly, a little bit too, in 2009, I remember as a kid, I didn't really know too much, but I do know that we had to put our house on the market. And for some weird reason, that gave me like a weird taste in my mouth, but it wanted me to really understand real estate better. Like, okay, I understand that we're going through some type of economical crisis or whatever, but I didn't understand it because I was a kid, but I knew it was real estate related. And so I wanted to then gain the knowledge to be able to understand what was happening.
Yeah, 2008 and 2009 was rough.
Yeah, but as a kid, you don't know, but I wanted to know.
Yeah,
so that
absolutely.
Was something that kind of sparked my interest too. Mm-hmm. Got licensed in college, and then got a really cool job over at the DJ and Lindsay team, which is a really good company here in Jacksonville. They do mostly traditional real estate. But it was, it was a grind there. They were, you had to call every day. You're going on showings. You're getting a lot of really good, knowledge, and you had a lot of support. So it was really a good place for me to be in my first year of real estate because I learned a bunch. Yeah. So shout out to them. And then
I know you were kind of thrown into the fire and did a lot more deals than the typical entry-level real estate agent.
Yeah, exactly. So I think, an average agent's going to do anywhere from 4 to 6, 7 deals a year maybe. And you had the opportunity there to have, as many pending as you wanted because they had, a really good lead system. And so I was exposed to a ton of deals and a ton of transactions in a really short amount of time. And so I feel like that kind of jump-started me a few years in front of my career, whereas, okay, I've done about 20 transactions in less than a year. That's about 3 years of experience for any normal realtor. Yeah. And then I know just we were roommates at one point too at that age, and we had always talked about a real estate brokerage of some sort or a real estate company. And I think now, we've really just, it goes to show the entrepreneur's guide is if you can have, a small group of people that you trust and all have the same common goal is that, these things that might seem intimidating at one point in your life really aren't if you're consistently striving toward that with, a group of people that also believe in it. So I think just in the last year and a half that we've really had the ball rolling here, I've learned a ton, and not only from a traditional real estate standpoint, but you helped me do my first commercial deal, which is a 17-unit apartment complex in Daytona, which I learned a lot from. Walking with Ernest on some of the projects and seeing how flips really work, because Ernest is the one that really manages our flips and
Master.
and asking him questions, and he can, kind of show me how, the flips work. And then on the venture side, seeing Mark, on his phone calls and going at it with the auditors and the conversations he has, I've jumped into the fire here, but it's like knowledge portfolio theory. So it's like a little bit of everything.
A little bit of everything.
Smorgasbord of everything.
It's been a smorgasbord of everything, but it's been cool to really see how, it was one of those things where, hey man, we're going to start this. So if you, we're going to quit our jobs and do this. And we did. And now look, we've gotten to a point to where we're, making some traction in Jacksonville. And
how was that whole scenario for you? I know that's a big part of your journey to say, hey, I'm quitting my job and I'm doing a startup.
I think it made it a little bit
part of your Anabasis.
That is
risk.
part of my that was huge, because I actually have I think I have a video on my phone still, which I'll share if anyone asks, where I literally recorded myself in the car driving up to my work and saying, okay, I'm about to quit my job. I don't know what's going to happen, but this feels right. And I think what made it easier too is just the trust that we've had growing up and knowing that, we've got each other's backs and that we're going to be in this together. So that made it a lot easier. But I'm not going to lie, I was nervous, but I knew that this was the time to do it. And like you said, if there's no risk, there's no reward. And I knew that this was something that I wanted to jump into head first. And I don't regret it at all.
There you go.
Look at us now, the Quiz Bros.
Yeah.
But what about you? What was I know we kind of touched on me, but what was it like for you? Because I know from my standpoint, you quit your job as well to kind of jump into this.
Yeah, tell us your Anabasis.
What were some of the emotions going through your head, or what were some things you were dealing with at the time?
Obviously, like you said, I started just a few years before you, had a few transactions. When I was getting my license at 19, I was only a sophomore in college. So obviously, as a sophomore in college, you don't really know a lot. You're just getting started.
You're just licensed, basically.
You're just getting started. But my first real estate job was at Berkshire Hathaway under John Holbrook. So John, if you're listening, John Holbrook, you're the man. And really, took me through a crash course of residential real estate, how to market, how to generate leads, how to understand the contracts, the paperwork, and really working a deal from contract to close. He really laid it out for me and helped me close my first, I want to say 3 or 4 transactions within the first year or so while I was still in college. I was bartending, working full time while doing real estate and taking a full course of classes. So I was a busy kid. By the time that I finished up, doing a few deals at Berkshire Hathaway and working under John and running kind of a marketing campaign for him and learning a lot about that, he did a transition over to Piney Woods Realty. So Piney Woods obviously is a real estate brokerage that is more individual agent focused. You're just running your own leads, your own transactions for the most part with a very high commission split because you're basically your own office. So I was thrown into that. I was doing deals all on my own, obviously with the help of John as well. I think my first big deal, especially from the commercial standpoint, was with you, Shoot GTR, which was obviously one of Anabasis' first, large commercial investments, which was an outdoor shooting facility that we developed from 100 to 3,000 members and put all sorts of ranges and amazing things out there. So
it was land.
Yeah, 30
land
acres.
Investment.
Yeah, that was developed over the course of many years. But that was the first deal that I underwrote from a commercial standpoint, understanding valuations, cap rates, and all of the fun stuff that I used from my finance degree that I got at Florida State. And whenever I closed that transaction and kind of added that to my portfolio and was getting out of college, I knew, man, I want to work in commercial real estate. but I don't want to go to a traditional commercial real estate company where I'm going to be a small number in a large conglomerate. And a lot of people that I talked to that had worked at companies like that said that, hey, don't expect to make $1 for your first 12 months. And me, I don't take no for an answer, and I got to pay my bills.
Right.
So, I really, really searched high and low. I probably put out 50 different applications right out of college until I ended up going on with Equity Pro as the commercial specialist for the company. And the reason why I chose that job was because I saw the most growth potential. I could advance quickly. I could make money quickly, and I could learn quickly. It was really from an advancement standpoint of kind of that small mid cap size company that I could learn a lot and advance really quickly. And in doing so, obviously, we transitioned into investing in properties, and went from residential to multifamily to self-storage and commercial, and learned the ins and outs of managing not only a transaction from that standpoint, but also how to really invest in these properties, how to analyze them, and how to actually manage the deals whenever you own the asset, right, and to reposition that asset into a viable deal.
Right, because so many things can go wrong, even though your plan becomes,
you're problem solving constantly, and there's always another issue or another hurdle that you have to overcome. But that's part of the job. Really answering your question, quitting my job kind of all came to fruition whenever we wanted to create the fund again, and I sat for my broker's license exam, and thank God I passed it first try, and got the broker's license. And really, it was a challenging point in my life because I had a really bad accident. I was in a passenger seat and hit by a drunk driver, and broke my neck, tore my shoulder, and had to go into surgery. So right as I got my broker's license and quit my job, I went into surgery the next day, which was the day after my birthday. So I turned 23, went right into surgery after quitting my job and getting my broker's license, and woke up the next day in full sling and everything. And then I just sat there on a computer and did everything in my power to figure out how I'm going to create these lead generation streams and build this company with you to what it is now. And I know at first it was really just us and the Bank of America tower, just sitting there day in and day out, just banging out the computers by ourselves, trying to just come up with the ideas of how we're going to create this and run this. And from there, obviously bringing you on, we just continued to flourish the operation. And really that is a culmination of my Anabasis, is to talk about everything from, like you said, from crawling, walking to running, to everything that happened along the way is a testament to just don't give up and find an alternative solution, because if
never take no for an answer.
If something's not working, you can find something else that will. And like you said, if anybody says that they haven't had losers, they're lying to you.
Right, exactly.
You will find some that lose, and you will find some that win, and you continue to establish those wins and recreate them, and continue to churn the wheel forward. So that's really my story.
Yeah, well, that's excellent, Bryce, on your Anabasis.
Yeah.
And obviously, as part of the show, we want to hear other people's Anabasis.
Definitely.
Yeah, I agree. And, I think that kind of leads me to, talk about kind of our last thoughts of the show, is just to, kind of give the culmination of everything. We covered a lot today, but, obviously we have Anabasis Real Estate Investment Trust that's going to be coming soon to the public offering. So, if you're a local investor, or no matter where you're at in the country or the world, and you're interested in what we're doing here in Northeast Florida and the real estate journey that we're going to continue to go up on, and you want to be a part of it, don't hesitate to reach out to any of us individually. We're going to have all of our contact information and socials posted here for you guys to get in contact with us and hopefully take the journey up with us. Or if you have any comments or questions for us on your personal entrepreneurial journey, we're happy to answer those questions and be here for you guys. And we're looking forward to continuing this show and having everybody tune in. So thank you guys for listening, and we'll see you on the next one.
Thank you.